Right traders, welcome back. So I've had so many questions about the ICT 2022 model, and I'm going to explain to you how it doesn't work, right? The ICT 2022 model or the 21 model or the 2016 model, none of it works. And the reason why is because you have all the correct knowledge without the final piece of knowledge you need, right? So we're going to be going over that in this video. So what you're looking for is you're looking for a POI, or you're looking for some kind of a fair value gap, a higher time frame PD array, a fair value gap mitigation. You're looking for something where you want to be taking a trade from. So let's say price taps into this area, price taps into this area, and you're looking for some kind of a fair value gap in this area. So let's say this is a 1 minute fair value gap and you're looking for a rejection higher. So you also have a market structure shift resting here in this region, but sometimes it works and sometimes it doesn't, right? So why does it work and sometimes it doesn't work? So let's just go to the charts and figure that out. And we're going to be going over some case studies, right? So you want to understand a couple of things, right? So let's just remove all the drawings, right? So if I just play price back, right? Let's say you had market structure doing this, right? So let's say you had an Asian range over here. This was the Asian range, and now we've broken structure and price tapped into this kind of fair value gap. So if you took a trade over here, right? Let's say you took a trade over here. What would have happened, right? If you put your stop loss below this fair value gap and you targeted this high, what would have happened? You would have lost. Why is that, right? You're not trading with any confirmation. You're not trading with any confirmation. So in this video, I'm going to be going over a couple of case studies. Well, mainly just one trade, actually, a one trade along on ES. I'm going to be breaking down how I trade, right? So I do trade somewhat of the 2022 model, but the 2022 model works on one thing. So if you're trading the ICT 2022 model, what you need to understand is you need to understand three things. You need to know where to trade from, you need to know what to look for, and you need to know why you're looking for it. So what does the where stand? So where, what, why? What does the where stand for? So a where stands for your key level. So you need to have a key level or a POI. So I call this a POI, and one of the most common questions I get is how do I form a POI? It is simply a 15-minute fair value gap. So let me explain. So what's going on? Before we just go on to the fair value gap, what we're looking for is we are first looking for an Asian range like this. So the Asian range looks to build liquidity. This is the accumulation of the market. Okay, so now what we're looking for is we're looking for price to sweep the Asian range low. The reason we're looking for price to sweep the Asian range low is because this is our manipulation, right? This is price showing us bearish manipulation. So this is the manipulation. And so what I mean by that is when price takes out the Asian range low, this shows us that sell side liquidity has been swept. It is a manipulation to the downside. Now, once we have that, we're looking for price to break structure. So I'm looking for a market structure shift just over here. So this is going to be my market structure shift, right? And so what I'm looking for is I'm looking for price to tap into a fair value gap after this. So this is not in the New York session. So I only trade the New York session. But it's important to understand that we can see London session respecting bullish fair value gap. So we're seeing bullish momentum or bullish order flow, right? That's important to understand. So this is typically what a 2022 model will look like. But some of them win and some of them lose, and you are frustrated and you're blaming your psychology on this. Well, that's not the case. The real problem is you're not using order flow, and that's what we're going to go over in this video, right? So we can see here price has taken out the Asian range high, right? So price has now taken the Asian range high. Now that doesn't mean you can't take buys. That doesn't mean you can't take buys. So what I'm looking for now is I am looking for the next 15-minute fair value gap, and I want traders to understand how I mark out my fair value gaps, right? This is how I mark out my POIs to begin with, right? So the reason this is a POI, and I'm just going to label it POI. So this is step one. This is the where. Where am I trading from? I always want to be trading from a POI. And so a POI is made up of a couple of things, right? We want to see a fair value gap and we want to see a market structure shift in our intended direction. That's all I'm looking for. So I do use ICT Concepts, but I don't rely on ICT Concepts for my entries. And this is what we're going to go over right now. Okay, so this is our POI. Now, what's also important to understand is that we have the previous day high. So this trade was all about targeting that previous day high. So for those who trade ICT Concepts, you only really need liquidity and fair value gaps. Notice how all of my concepts in all my previous videos come down to liquidity, right? We've taken out the Asian range, liquidity, and fair value gaps, which make the POIs, right? This is very important to understand. So you need these two concepts as a base form for forming your entries. So that is the POI selection, right? So after your POI, you need to understand what you're looking for, right? So what are you looking for on those lower time frames? So if you understood what you were looking for on those lower time frames, it will be so much easier to take trades without losing. So what we look for is we look for a power of 3 entry. So what do I mean by power of 3 entry? So let me show you. So I use the power of 3 indicator by 2 degrees. So if you go to the indicators and type in PO3 and you scroll all the way down, higher time frame PO3 with the little degrees, it's free. Don't use the second one, use the first one, right? Higher time frame, power of 3 by 2 degrees. 2 degrees spelled TOO. So if I just kind of play price on, what's actually going on here? So this trade was framed off the weekly power of 3, right? So this is the weekly power of 3. I'm going to untick the New York midnight opening price. So what you can see here is, though we have a weekly bullish candle, we can see price expanding heavily over here. What we've seen is the weekly opening price is situated just over here. So we are below the weekly opening price. So why is this important? Because this trade was about targeting the previous day high and the weekly opening price. So you need to understand, if I quickly draw this on the right hand side, the way a candle will form, the way a weekly candle will form is price will open, price will head down, we will create the low of the week, and then we'll begin to expand higher and higher. So when we're here in this region, right, some people call this the ICT market maker buy model, but once you have the low of the week, you want to be buying in line with the expansion, and the expansion will end when we're at the weekly opening price, which is up here. So this is important to understand, right? If you're below the weekly opening price, you want to be looking for buys, and so that is the framework of this trade. So I'm just going to get rid of the PO3 and keep the line. So that is the weekly opening price. I'm just going to label that. So weekly opening price. And so when you have the weekly opening price, you want to use it as a potential guide for the markets, right? So we have the previous day high and we have the weekly opening price. That is what we're looking for. And also we want to see price entering inside of our POI. So notice how we have a couple of targets. We have basically this red line and this red line, right? So we have the weekly opening price and the previous day high. So what we're looking for now is we're looking for the market to open. And so we want to see price tapping into our POI. This is very important to understand, right? Price must come into our point of interest or our POI. So on the lower time frames, I am not looking for any structure. I am looking for the interaction between the buyers and the sellers. And so this is very important. So if we wait for the market to open now, the market opens. So we're waiting for that 9:30 a.m. Eastern Standard, right? 9:30 a.m. And so this is what we're looking for. So without even going to the ATAS platform and reading the order flow, right? What we can understand is we want to see something like this. We want to see the market coming into this POI, rejecting higher, and we're looking for the order flow for confirmations, right? That's all you're looking for. You're not really looking for market structure shifts or fair value gaps. You want to understand the interaction between buyers and sellers inside of this POI. So with that being said, let's continue to play price on. What we saw over here, we saw a couple of things, right? So one of the most common questions I get is this POI invalid, right? Is this an invalid POI? Right? The reason people ask me that question is because we have seen price break below. So is this a valid POI? Right? Stop and ask yourself. So one thing I want traders to understand is when you're on the 1 minute, it's easy to zoom in on the 1 minute and forget what's happening on the higher time frames. Let me show you what's happening on the 15 minute. So on the 15 minute, we had a very different picture. And this is what I want traders to understand, right? We have seen a wick below. Right? We've also seen price come in just below, just before tapping into this area, right? So we've seen a 5 minute fair value gap being filled, and we see price wicking below the level. And so what does that mean, right? So when price wicks below a level, this shows us that price was unable to close below the level, right? Keep that in mind. A wick below shows that price was unable to close below the level. That means the level does have some strength, right? And we're going to be going over what that strength actually means and how we can determine that. But we've seen price wicking below this level, right? But this is what's very important to understand, right? So let's go to the ATAS platform. So this is the ATAS platform, right? So if I just go down to the 5 minute time frame, we'll go down to the 5 minute time frame. Again, this is the ATAS platform, what I trade on. So if we just go down to this price action, right? What we can see quite clearly is we can see aggressive sellers, right? So what was going on in this candle, this candle, this candle, and this candle, right? So what we're seeing, and we're just going to get these two images up next to each other, right? So we can see we're going to be focusing on this area. So this rectangled area over here, this is going to be important. And I'm going to label this in red. You're going to see why. So this is in red, and we want to understand what was going on here. So this red box corresponds to these two candles, right? So what was going on as price on the 15-minute time frame wicked below, right? So what is going on, right? Let's quickly go back up to the 15-minute time frame. On the 15-minute time frame, we can see those wicks, right? Look at those wick rejections. We're going to study what that means, right? We're going to study what that means. So again, masterclass on order flow, right? What does order flow mean and how do we use it? So order flow is a fancy way of saying buyers and sellers, right? In this case, it's actually aggressive sellers versus aggressive buyers. So if we just take a look, let's take a look at this candle, right? I want traders to understand this kind of candle here, this row over here. We see 1K for 883. So what does this mean from a fair value gap perspective? Or what does it mean from a buyers and sellers perspective? So 1K means that there was 1,000 market participants hitting the bid. The bid is the left-hand number, right? The bid represents aggressive sellers. Now, 883 aggressive buyers were present. So that means there were more aggressive sellers than aggressive buyers. So this is important to understand. The key word there is aggressive. So you have to remember it's sellers on the left and buyers on the right. Aggressive sellers versus aggressive buyers. So that 1K for 883 means that there were more aggressive sellers than buyers, right? We see that via the red delta. Because the red delta means that there's more aggressive sellers, right? A blue delta, so for example, if we just take a look here, for example, this blue delta, 771, is bigger than 648. So we can see more aggressive buyers than aggressive sellers. But here it's the opposite. And so we see that same running theme throughout. So if we just go back here and understand how a 2022 model works, right? So if this is our key level here, let's say this red box is our key level. The only reason a key level is going to hold is because we can see more aggressive sellers failing to drive price down, or in this case, they wick below. So they're unable to break below on the 15-minute time frame. Okay, so this is what we mean by a seller absorption. This is exactly what we mean by a seller absorption. So a 2022 model only works when it's backed up by order flow. So even if you look at it from an ICT perspective, we had structural high, structural low, structural high, structural low. So this is our MSS, right? This is our market structure shift, or our breaker structure, whatever you want to call it, right? This is our market structure shift, right? We also have a 1-minute fair value gap over here. So it's all the same things, right? This is the 1-minute fair value gap. So it's all the same things that you're used to trading, right? But why can't you make it work? Well, the reason why is because you're taking the markets for granted, right? You're not actually understanding how they work, right? So what's important to understand from an ICT perspective, right? Coming from a former ICT trader, right? We have our swing low, we have our swing high. So what we have is we have the 3 rules for an order block. Right, we have a market structure shift, we've come below the 50% area, we're inside of a POI, we've tapped into a fair value gap, we have all of our entry criteria that are met. So why is it that some trades work and some trades don't work? So I'm not looking to enter here. So if you enter here, for example, if you took a long position here and you tried to take a long position, that would have been a loss as well, a well-deserved loss as well, right? So why is it that some traders, right, they get stopped out before the move happens, right? You need to have confirmation over here, right? You've had confirmation here, you need to have confirmation over here, and that's what we're going to break down in this video. So you need to have confirmation, right? Even when you come into the 50% area, even when you come into a fair value gap, every trade needs confirmation via the order flow, right? This is the fastest way to stop losing. I promise you this is the fastest way to stop losing. So when price taps into your POI, right? So this was a 1-minute fair value gap, right? This is a 1-minute fair value gap just over here. So when price comes into this 1-minute fair value gap, you need to understand the interactions over here. And this is what we're going to break down on the ATAS platform. So if we just kind of break this down again, so we saw the break and retest, right? So this is the 5-minute candle over here. This is the 5-minute candle, and we're going to be breaking down this one over here, right? So we can see 1, 2 breaks above the fair value gap, right? We even see 3 breaks above the fair value gap, just like this, right? So why was this entry over here valid, right? Stop loss just below this area, and we want to be targeting at first the local high over here, right? So why was this entry valid, right? What made this entry valid over here? Right, so let's break that down. It's not anything to do with ICT, it's to do with order flow. So we can see prices tapped into this POI, and this is the same 5-minute candle. So what makes this POI interesting is the fact that we had 641 for 553. So there were more aggressive sellers than buyers at this price. So this was 6,300 on ES. Then we saw 461 for 335. Then we saw 270 for 151. Then we saw 30 for 0. So what we saw is we saw more aggressive sellers, more aggressive sellers, more aggressive sellers, right? Despite that, the market broke up once, twice, 3 times on the 1 minute chart. So this is the only reason a fair value gap holds, and this is the only thing that can bring everything in the 2022 model in ICT together. So this is ES in the New York session, right? So if you're a New York session trader, you only need one model, therefore one session and one asset class to make money. And so the way you want to do that is by understanding POIs and fair value gaps with liquidity, and then you want to combine everything with order flow, right? This is the most successful way you can trade the 2022 model. And so we can see aggressive sellers failing, and we can see these aggressive sellers failing as the market rips higher, right? So we can see, just from an order flow perspective, we can see aggressive sellers failing here, and we can see aggressive sellers failing here, right? So when you see aggressive sellers fail, this means that passive buyers are in control. So the only reason a higher time frame fair value gap or a PD array or an inverse fair value gap or a breaker, the only reason these things hold is because there are passive buyers driving the markets higher, right? So that is the only reason the market actually held. So if we just continue to play price on, we can see price rallying higher. And what's interesting to understand is price rallied higher all the way to the previous day high before potentially giving us a reversal, right? So we saw price kind of reversing at this area. So you want to be very accurate. You want to be very accurate with your targets, right? So I first targeted this high and scaled out positions over here. So if I just go to the Discord and show the entries over here, give us a second for it to load. So what we were looking for here on the Discord is, so this was the previous day. So this trade was just over $400 for the day. So again, to break it down, this is my entry. So my entry was at 63.01, stop loss just below the zone over here. So 62.08. So about a 3.5 point, and this was my first overall target, right? So 11 MES contracts in, just under $400 of profit, right? So $400. So that was the initial trade over here. So notice how the absorption happened. This is the 10 a.m. candle, right? The absorption of sellers happened just below the 10 a.m. Eastern. Something else to bear in mind, right? The absorption for buyers will come below the 10 a.m. Eastern because the market will absorb below the 10 a.m. before shooting higher. That's something you want to know from an ICT perspective, right? So again, 15-minute fair value gap just below the 10 a.m. Eastern, aggressive sellers trap, buyers in control, right? Previous day high hit. So if you want to catch these high risk reward trades like this, you need to understand where the buyers are entering the market, right? Where are the buyers entering the market? So we're going to go over this entry one more time, and I want traders to pay attention not to any of the numbers. I want traders to pay attention to what was going on over here. So on the 1 minute chart, we saw a big red candle coming in. So this big red candle, right? There were so many more aggressive sellers, right? You can see 379, 237, 45 for 0. You see 87 for 0, right? 38 for 0, right? So you can see 0, 0, 0. So there were no aggressive buyers present at this area. So this shows you 3 finished auctions. So I've been through this in many videos. When you see a 0 on one side, this means that the auction has been wiped out. There's no trading there. There's no aggressive buyers. There's only aggressive sellers trying to drive price down. So think about it from a logical perspective. If there's only aggressive sellers, right, and the market couldn't break below this fair value gap, right, what does that tell you about the POI? What does that tell you about the demand area? What does that tell you about the 2022 model in this case, right? That the markets are willing to go higher. The only reason the markets go higher is because buyers are trapped sellers are trapped by buyers, right? Buyers are passive buyers outstrength aggressive sellers, and that is the only reason the market moves higher. That is the only reason. So again, just over 400 for the day. And so this is the type of trades that you want to be taking, right? So a 2022 model, if we just kind of break this down, a 2022 model is the simplest model that you can follow. In fact, traders tend to oversimplify it, right? So a 2022 model looks something like this, but you want to be trading order flow. You want to be trading price, not patterns. So when price comes into a PD array area like this, right? Let's say price comes into an area like this. You need to understand what is going on here, what is going here, and let's say if you have a fair value gap, you want to know what's going on here, right? You do not rely on a market structure shift because price can shoot below, right? Price can retest here. So if you're trading the 2022 model, right, my highest recommendation to you is to understand price. Trade price, not patterns. And so just stare at this chart, right? Stare at the beauty of this chart and understand this. Understand that you are going to be trading patterns if you don't understand price, right? So do you want to trade patterns or do you want to trade price, right? So I'm going to finish this video off by saying trade price, not patterns.